Hello, YouTube, and thanks for tuning in. Guess who's back? By popular demand. Thank you for tuning in to this introduction video of what is going to be a multi-part series that will cover all things trading. This series is for the individual who is either thinking about getting into the financial markets or just getting started. Or maybe you've been trading a while and you're just not very good at it. This series is going to highlight some of the errors you may have made and how to fix them. I have spent well over $100,000 learning everything there is to know about the financial markets, so you don't have to. So stay tuned. But first, I want to take a moment to talk about what you are not going to find here. What you're not going to find here in this series are stock tips. If you're wanting to know what the next Amazon is going to be or the next GameStop, you're not going to find that here. I am going to teach you how to fish as opposed to pointing it out and telling you, go get it. You're also not going to find any product endorsements. I am not here to push anyone's brokerage platform or trading software. I am here to give you all the information you need to make an educated decision. So you may already be asking yourself, well, why am I here? If I'm not getting any stock tips or getting any product pushed on me, what am I getting out of this series? Well, you're going to learn everything there is to know about stocks. We're going to talk about ETFs. We're going to talk about futures and commodities. We're going to talk about Forex. We're going to talk about the different styles and strategies that go along with them. We're going to talk about options and all that goes along with that. We're also going to talk about technical versus fundamental analysis and when you would be using them. We're going to talk about all of the indicators that you can stand. We're going to talk about the terminology as well. So when you hear the term short squeeze or percentage of float, you're going to know exactly what they're talking about. We're also going to talk about money management and, of course, why 90% of traders fail. Not all in this video, of course. I'll be delivering the information in short, bite-sized chunks. So be sure to grab something to write with and something to write on. And don't forget to subscribe and hit the bell icon. So when that fresh content comes through, you'll be the first to be notified. And you know what the best part is? You're going to be getting all of this information absolutely free. That's right. I said free. So that means I'm not going to try to sell you anything afterwards. There won't be any book that you're going to need to buy, no course that you're going to need to download. I'm going to pass along all the information that you will have otherwise gotten from that fancy $20,000 online trading school right here, absolutely free. So, when do you get started? You've been kicking it around for a while, and in an effort to educate yourself, you have come across this series to find out when is the best time to get in the markets. Well, first, kudos to you for taking the necessary steps to educate yourself before putting your hard-earned capital at risk. But the answer to your question, and I don't care when you're looking at this video, the best time to get into the markets is right now. And you may be saying to yourself, well, Max, the market is at an all-time high right now. Why would I possibly get into the markets? Or maybe there's just way too much volatility going on right now. It doesn't matter. And here's why. There are only three directions the stock market can possibly go. That's up, down, or sideways. And you can make money regardless of what direction the stock market is going. So if at the time you're coming across this video, the market is trading at an all-time high and you feel that there's a pullback on the horizon, you can make a whole heck of a lot of money during a pullback. I'm going to show you how. Or maybe we're in the midst of a 3-month long bear market and you're waiting for the bottom. You can be profitable regardless of the current market conditions. And I'm going to show you how. But the first thing that you need to figure out before you put any of your hard-earned capital at risk is what kind of trader you want to be. This is what your style is going to be. Your style is going to be dictated by how long you are willing or able to hold positions for. The position is the time from when you buy the stock to the time that you sell it. So let's talk about the different types of styles there are. There's the day trader slash scalper. There's the swing trader. There's the position trader. And then there's the investor. And these styles will all boil down to whether or not you want your money fast or do you want it slow. Now let's talk about the day trader and some of the characteristics that make up day trading. The day trader is in and out of position during the course of the day. And there may be capital restrictions. Your brokerage platform, whether it be TD, E-Trade, Robinhood, we'll get more into brokerage platforms in a separate video, but they very well may tell you that you must have X number of dollars in your account in order to exercise that particular trading style. The day trader rarely holds overnight because they don't want any overnight exposure. Out of fear of the unknown, and they have no idea of what that stock is going to look like come morning, they just don't want to deal with that stress. If a day trader does hold position overnight, it's usually by mistake, or they're keeping their fingers crossed, hoping that a losing position is going to end up in their favor come opening bell the next day. The day trader takes small profits over several trades that can add up quite nicely and is ideal for volatile markets. But you will be glued to your computer screen. You better make sure that you have all of your snacks and your drink by your side because you absolutely must stay on top of it. And there's no waiting, meaning that your profits or losses are going to be realized pretty quickly. You're going to walk away from your computer knowing exactly how you did for the day. If you want a mental image of what life would be like as a day trader, there you go. That's the best one that I can find. That guy's a day trader for sure. Now, what about the scalper? The scalper shares a lot of the same characteristics that the day trader does. However, the scalper is in and out of position in minutes. There's still capital restrictions, and the scalper will never hold positions overnight and takes tiny profits over many trades. Now, what about the swing trader? The swing trader will typically hold positions anywhere between a few days to weeks at a time. There are no capital restrictions for swing trading, so if you've got $500 in your brokerage account, have at it and swing trade to your heart's content. The swing trader will attempt, and attempt being the key word, to capture trends in their entirety. They rely exclusively on technical analysis. We'll get more into technical analysis in great detail in a future video. And the swing trader does not care where the opportunity presents itself. And swing trading frees up time for things that may be more important, like a job. If you are working a 9 to 5, or or at least during market hours, that's something that should be taken into consideration if you think that you want to take on day trading or scalping. Now, the position trader shares a lot of the same qualities or characteristics that the swing trader does, but the position trader holds position for months at a time, not days or weeks. The position trader relies on not only technical but fundamental analysis as well. We'll get more into fundamental analysis in a separate video. And the position trader cares very much where the opportunity presents itself. And the position trader will typically check their positions on a quarterly basis. And then there's the investor. The investor's strategy is set it and forget it, or buy and hold. There are no capital restrictions for the investor. You got $500, then have at it. Put it wherever your little heart desires and see where it ends up in 10 years. The investor relies exclusively on fundamental analysis. They're very selective also about where they're putting their money. And the investor will typically check their positions annually. And it requires very, very little screen time. So, what type of trader are you? Well, there's a few questions that you should be asking yourself before answering that question. The first question is, well, how much time do you have to dedicate to your trading? If you are generally a very busy person, particularly during market hours, well, you should forget about day trading or scalping. In fact, you should just eliminate that from your list of possibilities right off the bat. The second question is, you want to get paid now or later? Are you trying to supplement your income, or are you trying to set up a nest egg for retirement or something to pass on to future generations? Or do you want to get paid today? Well, the answer to that question is going to dictate what style you're going to take on. And of course, how much money do you plan on trading with? Due to capital restrictions, if you're trading with $5,000, your brokerage platform isn't going to let you day trade regardless of whether you have the time to dedicate to it or not. So that makes the decision easy. Now, what if the answer to one of those questions is both? Well, I want to supplement my income and I want to set up a nest egg for retirement. Can you have two different styles? Of course you can. You can have as many different styles as you like to accomplish your financial goals. However, it is very important not to mix your strategies. The strategy that makes one particular style successful is not the same strategy that is going to make a different style successful. So keep them separate. We'll get more into strategies in a separate video. Now, you've heard me say that quite a bit in a separate video. That is because this is just the tip of the iceberg. If you think that this game is for you, go ahead and click the subscribe button right now, because there is much, much more to cover and many, many more videos to follow. And the next one could be the one that changes your situation dramatically. Now, that being said, once you have subscribed, don't forget to hit the bell icon. That way, when fresh content is dropped, you are the first to be notified. And please, if you found this information useful, please hit the like button. The split second it takes to do that means a tremendous amount for the channel and will allow me to keep creating content that is going to make you wildly successful in the financial markets. Thank you again for watching, and until next time, stay profitable.